Hi, Mark. Looks like you're muted.
Hey, good afternoon. You hear me now?
I do, I do.
Oh, doggone it. All right. Good afternoon or good morning, wherever you're at. Welcome to Mark's Traders Lounge and Help Desk. The Help Desk portion will start next week, but we'll have the Traders Lounge today and Thursday. On the Help Desk, once we get going there next week, if you have problem trades on, you'll be able to share your screen and we can talk a couple minutes about it, see what we got, and see if I can give you some quick help if something like that comes up. Um, and anyway, so let's get on about the business of the Traders Lounge today. And you might see, hopefully, everybody can see over here in the chat. I've put a few links. Of course, I put a link to my email address, a link to my YouTube channel. I also have a link up there, the very first one, to a Zero Hedge article. Zero Hedge is a site I like to go to. It's really good market news, other stuff too, but the market stuff is really pretty good. And what that article does is very exhaustive, really, for this week. They put out that article tells you everything going on this week, some opinions on what's going on this week, news events that is, and this different information around those news events. I thought that you guys might find that helpful, so I put it up there. Are you guys seeing it okay? Everybody? There's somebody let me know.
Yeah.
You see it? Okay, great.
Yeah, it's in the
All
chat.
right.
If you joined the chat, if you joined the meeting after you put it in, then they wouldn't see it, Mark, but I'll put it in the recording.
Okay. Hey, I'll tell you what, I can copy and paste it one more time in
And
case.
I do have another shorter one, Mark at aramir.com, also forwards to Mark too, so it's easier to remember.
Okay. All right. I'm going to put this article link too. And just in case anybody came in late, you'll see all the stuff I put in earlier. Yeah, I know that I wasn't sure how Zoom did that with the because that the what you put in the chat, because I have noticed sometimes people don't seem to be able to get it. But
It's
there
just
it
if they
is.
come in late, they wouldn't see it.
Yeah. Now they should be able to see everything I posted, I guess. Yeah.
Correct. Yeah.
Okay. All right. So let's talk a little bit about what's going on in the market today. I'm going to share my screen. And as we can see over here, the SPX made a pretty good run, didn't it? All the way up to 40 to 50.48. And now it's backtracked a little. You might remember today at the opening bell, I said if we get up to 50.50, we're probably hit our head a few times against that if we can get through it at all. These things kind of happen. Round numbers like 5,000, 5,020. Both of those numbers, there was a little bit of a struggle to get through them, 50-50. Now we've had a little struggle there. Not to say we won't keep attempting, not to say we won't eventually get through it, but these are just things that usually slow the market a little bit, those round numbers like that, or big numbers like that. So we back down. We're not quite at the day's lows, but we're closer. I guess that's pretty much a tie. No, we're a little closer to today's lows, I guess, than we are the highs. Um, and let's just take a quick peek at VIX. As I told everyone this morning at the opening bell, I'm a very VIX oriented trader, meaning that I use the VIX to help me time what I'm going to put in. Um, and you know, just kind of basically speaking, I'll put in different sorts of butterflies. Usually, I'll consider them all the way from 13 to 25 on the VIX, depending on the fly. And I usually would consider calendars once we're under 20 on the VIX, and I really look at them and really like them when you're under 14 or 15, like we are now. So with what I just said, who can tell me what trades could you do butterflies today based on what I just said? Does anybody remember? Could you do butterflies? The VIX is 13.70 with the parameters I gave you. Anybody? Could you do calendars today based on the parameters you gave? Yep. You could do butterflies and you could do calendars. Good job, Jose, Lico, and whoever else answered in there. But yeah, all right. So yeah, so when you come into a day like this, you go, well, I guess based on that standard, I could do either. So now what? Well, one way of just kind of dialing that down is first off, what have you got on? Are you a person who trades flies and calendars? Okay. Well, what do you have on already? Well, I've already got on a fly. And the VIX is really in the lower end of the range. It's under 15. Remember, I said I really put them in focus under 15, the calendar. So if I already had a fly on, I'd be looking at a calendar today. Now, it's important that I don't like to put calendars and flies on in the same expiration. I like to do those different expirations. Which is easy enough usually, because if I came in today with nothing and I put on a fly today, then it would be, I usually use 21 days and more out, a lot of times 35 and out with my all put flat fly. So it'd be another easy choice to pick a calendar because that's in a different expiration. It'd be nearer. But here we are below 15, as Jose pointed out over there. Calendars are probably even better in my mind than flies today. Not to say flies couldn't work. And I'm going to talk a little bit about that. So now is the time of day, by the way, when I start looking at putting on trades that are flies, calendars, non-directional trades. And the reason I wait till now is because, as I said this morning, when you put on a trade like this, you're most vulnerable to big movements right after you put it on. And the reason is you haven't calculated any theta yet, right? So if I had this trade on, this is actually for this Friday as an example, I would probably do it the next Friday, but you could do this. But if I have it on here and the price moves big rather quickly today, it can go against me more than, say, what if I was in this trade 2 days from now, Valentine's Day? Now, look, I've accumulated some theta. So things aren't as damaging when it moves around. So that's why I like to do stuff a little later in the day. It gives you that chance to have it on with only a small chance that would ever run you anywhere near trouble in the first day. I don't know if you guys have had this experience, but I put on trades like this, early in the session, and then it runs against you the very same day. You put it on here, and then it runs up to 50 points in the session, which is not unusual in this market, is it? And then you're going, wow, I wish I would have waited, because it would look even better up here, that type of thing. So that's why I like to wait till later. Now, when you do a trade like a butterfly that's further out in time, like this is 39 days out, it's not so important, right? But I still usually wait, because the reason it's not so important is it's unlikely to get you in any real trouble. You may have to adjust it, though. And by the way, I would be moving this around a little differently. I'm going to get to that. So these two trades are on here are not necessarily what I do right now. I have to fix them a little bit. I just had them in here. So be careful with that. Sometimes I've had this happen in the past where I had somebody ask me one time about Apple, and I don't normally trade it, but I had talked to somebody about it 4 weeks earlier or something. And I went over there and there was a trade that person and I looked at that I never did. I was just looking at it with him, and somebody saw it in a lounge like this and they put it on immediately. You shouldn't do that, right? Because in that case, especially because I wasn't doing it. And what's here, a lot of times I need to tweak around a little bit. I just want you to understand that it's kind of a placeholder. But what if we did come into today? And if you're new in here, by the way, ask questions anytime. Jose says, would you consider CPI tomorrow the possible VIX for the possible VIX movement? Here's what I'd say about that. Yes, I think that you could have VIX movement. I'm not so much worried about the VIX going down a lot more. It could get in the 12s. That's not unreasonable, but that's not going to necessarily be that damaging. But if something happened with the CPI that maybe that's a really hot number, which means there's more inflation than the market anticipated, they would probably fear the Fed now has a little more ammunition not to cut rates. And that type of thing. And I've heard about that. Somebody asked me, what are your thoughts on Schwab margining of calendars? I've heard about that. They wanted to do that. I thought this in 401ks, Jim, but I'm not with Schwab. I know they own TD Ameritrade, but they kind of grandfathered in what we're doing over here with TD Ameritrade, and they're not doing that to us as of yet that I'm aware of. But I've heard it was only going to be with retirement accounts, but don't take that as gospel. I think margining a calendar is probably not. I don't understand why they'd want to do that. but sometimes they have these weird squeamishness about things. I remember, oh, it's probably been 8 or 10 years ago when they started, we'd have these double diagonals. Oh, did they? Okay, so I guess they are doing it. All right. They had double diagonals and they were margining you on both sides, which it's almost not impossible, pretty much so unlikely, it's incredible that you're going to lose on both sides of a trade like that. But they margined you on both sides. And then there was a lot of uproar and they quit it. Yeah, I'm just not well versed in Schwab's rules and the calendars. That is unfortunate. What do they charge you, say, if you put on a calendar like this that's $300? You must have a level 2 account for margin. Oh, okay. Okay. Another reason to trade. Yeah, I mean, that might be a reason you might want to go to Tasty Trade if they're doing that to you. Sure. And I will go over what I'm offering here. Somebody asked there. I'll go over what I'm going to be offering here at Aramar in a little bit here. Quite frankly, I'm going to be offering the opening bell, what I did this morning. I'm going to be doing a trader's lounge like this on Monday and Thursday, and I have some other stuff I'll talk about too. All right. $500 if you did a calendar for March. Okay. All right. So a trade like this, to me, I think you're better off to go out a little bit further and go out to the 23rd, which is next Friday. And then I do 4 days wide and do the 27th. Jose says, Mark and Pest have had a lot of bad experience with vol skew between front months and back months on calendars, verticals. Many times front month increases instead of decreases, the front month stays the same. Okay. I'll talk a little bit about that. One of the reasons I like to use SPX. Oh my goodness. Oh, okay. I thought that was oh my. That's crazy, Jay. Yeah, I think you'd have to go somewhere else there, Jason. Wow. $500,000 to put on a calendar? Hmm. Wow. Yeah, that'd be the end of me in that brokerage. Um, but anyway, um, when you do stocks, I think a lot of times you see more of those skew differences. But in SPX, you can see a difference between, say, your short and your long in a calendar and their volatility. But I don't worry about it as much in SPX as I do a calendar a stock, because a lot of times that stock type of thing is more news driven, and that's when you can get more in trouble with that. But if we looked at the 50-30, let's see, call calendar here, the implied vol of the 50-30, let's just look at the two of them. This is one way to do it. I know there's others. It's 10 and a half. 10 and a half on the 23rd's implied vol, and on the 27th it is almost had it. Oh, 10 and a half versus 9.84. Yes. And I, be honest with you, folks, I don't even look at that in SPX because I haven't found that it been all that relevant. Yes, even though in SPX, you could have the front go up more than the back. There's no doubt about that. Now, normally, that's only temporary. Say, for instance, if you did put this calendar on for this week, and you put it on to expire this Friday, and maybe you bought then no, this Friday's the 16th. So you expire this Friday, maybe bought the 20th. Likely, this volatility is going to stay jacked at least till after that CPI tomorrow. So if you had it on, maybe you even had it on since last week, you probably won't see a lot of relief in the volatility of this Friday expiry until after the CPI comes out tomorrow, because the market, I think, is pretty pent up over it, as well as the PPI and some jobs reports on Thursday. But you'd probably see at least a weakening of the IV in the short month or week. This one here, the 16th, after that CPI comes out tomorrow. So that kind of thing can happen. Yes, you can see the short go up more than the long. Usually that does work itself out after it does work itself out usually after a news event goes out or comes out and the volatility gets relaxed. Yeah, and if you look over here, the volatilities are also over here in Thinkorswim also. I didn't have it. Whenever you have, if you have this side going over here where you can see enough stuff, it kind of mutes this side. So that happens in TD Ameritrade. But thanks for pointing that out, Charles, for folks over there in Tasty too. Anyway, so I like a calendar like this for next week even better because it's going to be less harmful, right? If we put this on today and then tomorrow there is a move in the vol or even in the price with the CPI release that's an hour before the market tomorrow, this trade will be easier to handle if that happens than one if you did it for this week and it'd be Tuesday already of expiration week. You're already in the trade if you did it for this Friday. And then it's a little harder to repair. But this trade, you can put this on. Now, if we do get a move a bit, well, if we get a 50, 60 point up move, then yes, you could add a calendar here to the upside or fly. And if we got one to the downside, maybe 40, 50 point, I might do it a little sooner. You see on the downside where you're starting to lose money. If I'm tapering off and losing cash like this, I'll usually about 10 points before this lower expiration break even, which is at 49.80. So probably if I was at about 49.90, I would go ahead and add a calendar down here then, or a fly, whichever. But so that would be, I think, the better plan. If you want to put on a trade today, a calendar, I think you'd be better off to put it in next Friday's expiration. And as I said at the opening bell today, I think if you put this on today, you have a reasonable chance of being out of it at 8 or 10% profit, which is my general goal, by the time you get to this Friday. Let's just, now this is theoretical over here, folks. You know, I'm not going to tell you it's not, right? But by the time you get to Friday, you could have 10%. This is a $535 trade. Maybe you're going to go for, $60 just to cover some fees and stuff as a trade goal. I think you got an excellent chance of having $60 profit per contract by Friday. If we're, anywhere around here, if it gets along the edges, maybe not as much, but I think you can do it. And then you'd still have another week left in the trade, but you could take it off before the weekend, I think, most likely. It's just not nearly as problematic whenever you put things just a little bit further out, just a week out instead of 4 days. I know there is with the zero DTE, there's a lot of folks who wanted this trade shorter term, shorter term, shorter term. And generally speaking, that's how you blow up an account a lot of times, not always. If you got good training, like they're in trading small, like Tom's teaching over here, I think that's good. But a lot of people do this without any training. And if you don't have somebody there with you, I think it can be problematic. If you want to do that, then get in a trading room like Tom has there with the 0 days to expiration. As I said this morning, somebody asked me about it. I don't do that. Most of my trades are going to be anywhere from when I put them on, they'll be 4 days to expiration till maybe 40, once in a while more than that. But when I do calendars, most of those will be either 4 to 18 days or so of expiration. And most of my flies will be 21 to 40 days from expiration when I put them on. I also use diagonals. I'll talk about those. But those are also roughly 4 to 18 days, sort of like a calendar. It's another long Vega trade. And the theme there is long Vega trades, the further out in time you go, the more volatility sensitivity you have. If volatility goes against you, it can hurt you a lot more. So I tend to, with calendars and diagonals, I tend to do those usually, like I said, no more than about 18 days out. And normally, I'd say 80% of the time, if I put on a calendar, I put it on for the Friday following the week I'm in. So I came in today, wanted to do a calendar, here I'd be putting it on for next Friday. And the same thing would be Monday through Thursday. So if I did this on tomorrow, Wednesday, or Thursday, I'd be using the same, most likely, next Friday's expiration. Why didn't you include Friday? I don't normally enter new trades like this, non-directional trades on a Friday, because market makers have a tendency, what they do is they take the volatility out of a lot of these options on a Friday and put it back in on Monday. If you follow that along, you'll notice that from Friday to Monday, you'll very often see volatility increase. And they do that so that you, if you put a trade on a Friday, take that weekend risk essentially for free. Because if you put this trade on Friday morning, this one here, if you put it on this coming Friday morning, and you might, what if you paid $5? And you go, okay, I'll get it on now and I'll get the weekend decay. Well, you won't get the weekend decay until Monday after the open. So what you've done is many times you might pay $5 for it. And if you waited till Monday, provided the market didn't have a huge move, you could pay $5 for it on Monday, be the same price. Sometimes I've even seen it cheaper. Now, the only way that wouldn't be true is if we had a big move, but hey, why would I want to be in this calendar on Friday if there's a big move over the weekend and now I got to deal with that Monday? That's no fun. So if you're going to put on trades, non-directional trades, calendars, flies, I normally do them Monday through Thursday to begin them. Now, adjustment trades, sure, I'll do those on Friday. But that's why I tend to stay away from Fridays. Now, it's not an absolute, but most of the time I don't do those. So so that's the calendar. I would put it, oh my goodness, we're really going down now. So if you wanted to put this in the volatility, yes, it's firming up a little, but it's still fine here. So if you hadn't had it on already, I'd probably do something like this. You might even put it on at 50-10. And I think that's an excellent trade for today. If you have questions about it, let me know. Now, another idea would be some sort of a fly. I'll just start out with my all-put flat fly that I do a lot. It has about if you put it on in the right environment and trade it correctly, the way I teach it, it has about close to an 80% success rate. But you have to follow the plan, the adjustment plan. When do you put it on, which is anywhere between 13 and 25 in a VIX? How do you structure it? Well, I'm going to show you how I structure it. The way I structure it is and it can be, by the way, it's called the all put. That's what I was using at the time, and I just named it that. It can be with calls. Puts or calls, either one are fine with this. I know it's called the all put. It's a little confusing, but with the SPX being cash settled, you can do either. Anyway, what I do is if I want to put one of these on, I normally put it on with the middle of the fly, a little below where we're trading. So if we're trading at 50-24, oh, we bounced, we are moving. I might do the 50-15 or the 50-20. So probably the 50-20. It's a little below where we're at. Why? This gives me a hair more room to the downside. And then what I do with that is I'll go up 60 from the center, 50-80, down 70 from the center, 49-50, and I'll look at that first, 60 up, 70 down. And then I'll look at the break evens, these expiration break evens. What if I get to the edge of my tent here today or likely tomorrow? Well, I'll be down at about $30, $27 at the upper break even, which then I'd go ahead and adjust it. At the lower break even, I'd be down about $55. Now, a different way you can do this is you could go up 65. Now, if I go up 65 and stay down 70, I keep the down 70 constant all the way from 13 to 25. Down 70 from the center is a constant with me. What varies is whether it's 60 or 65 up. So now I'm looking at 65 up from the center. What happens? Well, I'm down a little bit more money on the upside if we run up there. But look at the downside. Now I'm basically flat. So what that means is I'm a little more comfortable. If we do run down here, yeah, I can adjust it. You may even be able to take it off at a small profit if you don't want that aggravation. And so if you it's just a way of leaning. If you lean a little bit bearish, you're a little worried about the downside. And I think any prudent, observant person would be a little concerned that we could have a pullback. Is there anyone who doesn't think a pullback's in the picture? That's just at least reasonable to suspect that, right? I think all of us think that's been following this when you just go up, 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 up. Sooner or later, it at least pauses and retracts a little bit. That doesn't necessarily mean the move's over, but we could easily be down in here by tomorrow or even a couple of days from now and still end up making another run up to get a bass 50-50. Who knows? That's why I like this. This is why I got into this style of trading in general. I get tired of picking direction all the time. I still do some directional trades, but I really would prefer to do things where it can go up some, it can go down some, and I don't have to just outright pick direction and be correct and just make my money off of time decay. Every day goes by. These options are that I'm selling, these rich theta rich rather at the money options are decaying even more, and that makes me money, and that's why I like to do these as opposed to, hey, put on a call vertical or whatever you're doing here, and go up. It has to go up or else you lose, or if you did with puts, it has to go down. Or same thing if you were hearing your sell call verticals. If it stays the same or goes down, you're right. But boy, if it runs back up, you're in trouble. Whereas in this, we can go both directions, or it can lay here. You don't need it to move either. This is the thing of beauty about these theta positive trades in my mind. They just give you a little easier trade to repair if you need to. And just you're not a slave to movement right off the bat. Now, you say, Mark, this is 39 days out. I don't want to stay in a trade for 3 weeks. Well, you're unlikely to. Most of these trades, you'll be closing in 8 to 10 days. It's not a guarantee, folks, but most of these trades you'll be closing in 8 to 10 days, even if you adjust them most of the time. You won't be in these 2 weeks all that often, unless there's a lot of market movement. 8 to 10 days, get out at 8 to 10% usually is my goal, 8 to 10% of what I paid for it, right? All right, so let's talk about one adjustment here real quick. So what if we put this on and we do run down? And first off, volatility might help you a little. This would probably raise up a little, but what if we get down and our lower break evens around 49.60, expiration break even, and we're at 49.71, then I have to help myself out here. I got to do something because the wild animal's running down. I want to give it more room. So how would I do that? Well, if I'm at 49.70 and I want to adjust this, I want to give myself more room to the downside. What I would do is go down about 30 points from 49.70, maybe to 49.40. And it can be puts or calls. Let's just throw puts on here. And now I have more room. So just so you can kind of get a visual, here I am at 49.70. I'm actually losing a little money, and I'm out of room. Maybe we're even get towards the end of the day and go, wow, what if this thing gaps down some more? I'm in trouble. Well, let's give yourself some more room. So if we do this, now you're at 49.70 and you're almost in the center of the graph, aren't you? You're looking good here. And then for you to have to do anything again, it's going to have to run all the way down in here. But so you just gave yourself more room. That's really what that's all about. More room in a trade is always nice. And then, by the way, if I did this, let's say I double it up. Whatever I have into two trades together, say I had 800 into two of them together, I'd like to get, 6, 7, 8% of 800. I'll take a little less if I have to adjust it and double it up. But that's reasonable, I think. If you've had to adjust a trade and you say, Mark, I want to cut out before 10%, this trade gave me trouble, I think it's fine. If you want to hang around, maybe you could get 10% of the doubled trade, and that's fine too. One more thing about adjustments here. I'm surprised somebody hasn't said this. Many times when you show this kind of adjustment to folks, and then you say down here, I'm going to add this. What's the first thing that comes to your mind, folks, when you see me tell you to do that? Anybody have a thought? If you don't have a thought, that's fine. I just, if somebody did. More at risk, right? Right. More risk, more expense. Some people might say, yeah, this is a little longer vegan. Yeah. Some people might also say, hey, Mark, this trade went against me and I'm adding money to it. Isn't that against the trading, Bible, so to speak? Adding capital, Jim says. And that is true. And a lot of times it's not always best to add capital in any large way in a losing trade. But what you can do, now this is provided you're not doing one lot, but if you're doing
Hey,
one
Mark,
lot,
did you hit the record button?
oh my goodness. I think I forgot, Tom.
Well, better late than never, I guess.
All right. I apologize over here. Hang on. I'll be back. It says it's, did I hit it?
Oh
No,
yeah, you
it's
are.
recording.
Okay. Yeah, I guess we are. Sorry about
Oh,
that.
goodness. Goodness.
Yeah, I wasn't the host. I couldn't record, so I thought, oh, maybe he's not on. But sorry, that was my bad.
Oh, no, no problem. I'm going to do them for the site here too. I've done like hour and a half courses that are recorded and then folks can purchase them. But I've done that, get through it, and I didn't share my screen. I forgot, or you forgot to hit record. That's what's more
It happens.
frustrating than teaching for an hour and realize you just blew it. But okay, so back to the point at hand. So if you're in a one lot, well, you don't have really much of a choice. If you're going to add to it, yeah, more capital. That's kind of the way it is. But what you can do if you're trading something that can be, say, split up or whatever, let's say you're doing a two lot, what you can do if you get down here and you're getting in trouble, you can say, all right, I'll sell one and I'll buy another one. Now you still have more room. You should have a fairly level amount of capital in the trade. So that's nice. But that is one way to kind of handle that situation. If you're doing more than one lot, maybe you're doing a four lot. Maybe you know, Mark, I'm doing fives. What do I do? Well, if you're doing a five lot, you can sell two and buy two, sell three and buy three. However you want to play that is fine. But that's a way of keeping your capital a little more level once you're out of one lot trades. What's your adjustment for the double calendar? I'll talk about that here in a minute. But anyway, so we double up here at so we talked about it. We went down 49.70. I'm out of room. I go down around 30 points. It can be more than that. It can be a little less sometimes. One thing you can't do, I'd say the biggest mistake I see people make with adjustments, other than not making them, is they'll do it right at the money. They go, oh, I'm in trouble here at 49.70. So they'll add a 49.70. Well, it doesn't really do anything for you. Let's look at that. So it's not really doing much for him at 49.70. I'm still on the edge. And there's another problem with it. To the point that somebody brought up there, what do I do next? What if I do this? What if I do this and then it does keep running down? Or what if it turns tail and runs back up? Well, what I do then is if it gets about halfway between this short strike and this break even in here, I would take off the upper. And the same thing, if I had this on and then it ran up here, basically if I'd done this down here and it ran all the way up to where we are now, then I would take off the lower. And then you go back to a single, and we're back to single rules where I wouldn't do anything unless I'm near the break evens. You could adjust. Now, that's a lot to happen in a calendar. It can happen, but if I'm putting this on now for next week, that's probably about as far as adjustments are most of the time going to go. But so that's how I do that, and a little bit about how you can keep your capital more level. But anyway, the trades I think are decent for today is something like this, or you could do the all put out here. Oh, and I didn't touch on it, but I'll go ahead and do it now. If you wanted to come in a little closer, I'd at least probably be 21 days or more out. I think that would be like the eighth. What is the eighth? The eighth is, yeah, 25 days. Let me go down here. 25 days. Yeah, I think that's about as close in as I'd probably come today. And the reason is when you get in closer, things get a little worse for you on the edges. But you do get faster time decay, but you pay more for the trade usually. So it's up to you. I think you're going to, long term, I think you'll have your best results in flies if you do something like you all put 35 days and up, usually in at 8 or 10 days. But I think you'll find it a lot more peaceful. So somebody asked earlier what I'm going to bring to this site, and one of them is this Traders Lounge on Tuesday and Thursday. And starting next week, I'll not only go over trades and adjustments, I'll go over them more in depth, and I'm also going to do a help desk, as I said earlier, where I take a few people if they have problem trades on live trades, not trade ideas, but problem trades, and they want to show it to me and see what I think maybe they should do. You can share screen, connect your audio, and it can be very helpful. Little help desk. So that'll be Mondays at 1 Central, Thursdays at 1 Central. And then every market day, Monday through Friday, if the market's open, I'll have the opening bell which is where I look at overnight moves, look at the news of the day, talk about what trades might be in focus that day, just like I did this morning. And as Tom already stated, it is already recorded and on the site there. If you want to look at what the opening bell was like today, it was a little wonky. It was my first time using this, but it'll get smoother as we go. But I'm going to do that. I'm also probably by the end of the week, that's the plan. I'm going to start a trade signal alert where I'll tell you what I'm doing. Now, hey, I'm putting on this calendar right here for 5:20 at whatever. I'm going to text it out. It goes out to you through Tom's service he uses for that. Everybody that's a paid member of that texting service gets a text that says, I'm putting on this calendar here. I'm going to pay this for it or around this. By the way, you don't have to pay the exact mid. It could be a little above. It's fine. Maybe within 15, 20 cents. But anyway, you'll find out when I put it on. If I adjust it, and I'll give you a plan when I put it on. If I adjust it, let's say in a few days I did have to add a calendar. I'm gonna say, hey, I added a calendar. Boom, text immediately. I just added a calendar. I paid X. I added this calendar. Or I added this fly, and so I'm going to start that. And what I plan on doing initially is putting out a couple trades a week. A lot of times it'll probably be, if we're down in this low volatility, it may very well be just what I'm doing today, a calendar and a fly of different duration. So you might get a text today, hey, here's a calendar. You might get a text tomorrow, I'm doing a fly, or it could be another calendar. But usually 2 trades a week. It shouldn't be any less unless we had market haywire. But generally, 2 trades a week. Once in a while, you might even get 3 trades a week. Signal service, and then it's a little easier for you once you understand how to put the trade on and do what I'm saying in the text. It does help you out, and that you know what I'm doing, and you can follow along. It can be quite educational. Also, I think it's a good complement to your trading if you're trying to learn this and do this, and it can take a long time. I know what I showed you today looks simple, but I found it takes people a while to really get good at it, particularly the adjustments. And I think it'd be a good complement to something like this too. Also, I do offer one-on-one mentoring. You can contact me directly there at my email address I put in there. I'll set that up with you. Those are one-on-one in a Zoom meeting room, just you and I, and I can dial that into what you're doing. Usually the 30 to 60 minutes, depending on what you want to do. And then I'll get to know what you're doing, your experience, and help you out with problems you're having. Maybe it's goal setting or something. A lot of times in this Trader's Knowledge, I'll cover all that in a global way. Thank you very much, Mike. Yeah, Mike's been very successful with my all put flat fly. Very successful. He and another guy, actually, I kind of introduced those two to each other, and he's done well with it too. And I have many others who have also. I came up with that trade in 2015, and other than 2020 to mid 2022, it struggled a bit. I didn't do it as much, but other than that, it's been good. It's been back doing well since the middle of last year or so. And it's fine, like I said, to do today. So the Traders Lounge, the opening bell Monday through Friday, the trade signal alert. I'm also doing one-on-one mentoring, and also on this site, I will be offering deep dive courses. Okay. Meaning that I might do, say, my all put flat fly. I haven't done a new one in a few years, so I really do want to do a new one with all the new stuff. I'm probably going to do a new and updated all put flat fly. I know there's some things I do a hair different than I used to, and a lot of other things that I'll add into that. And that might be an hour and a half course that you could buy, keep it, watch it whenever you want. I'm gonna start doing those probably maybe next week. I'll try to have one up if we can. So that's what I'm bringing to the site for whoever asked there. I'm trying to remember. Someone says, should you just start at 7:45? I'll be happy to attend then as well. Tom's group starts at 8:15, and you would proceed him for 30 minutes, which would be really great. Yeah, I'll take that, under consideration, Terry. See how many other people want to do that. I might be able to do that. And I think that might be doable. But what kind of return do you usually get? Returns, they vary, obviously, but in my experience, if you trade a conservative option income style portfolio like I do, with the core focus of these non-directional trades, flies, counters, diagonals, I think if you follow the plan, you can on average return, this is conservatively, 7 to 10% a month. Some months you might make 20, some months you're going to lose. I hope nobody ever tells you that you're never going to lose whenever you are going to have losing months, maybe even losing years. But I think 7 to 10% on average on what capital you're using in a month. And many months you could do better than that. But I'd say that's a good average if you're doing this. Yeah, I understand, Terry. Let me see what I can do about that. Um, and maybe I'll talk to Tom. Tom might be able to do a survey or something and see what people think. Because I'm not opposed to it. I'm not opposed to 745. Um, but we'll have to see what most people want to do.
Yeah, we
All
can
right,
definitely do a survey.
what's that?
We can definitely do a survey.
Yeah, why don't we do that maybe next week or a couple weeks in and give people a feel and see what they want to do. And
Yeah,
does that sound good, Tom?
perfect.
All right. Anybody else with a question before I go? I'll be back at 8 o'clock Central Time tomorrow with the opening bell. Be 8 o'clock for now. We'll see what we can do. Hey, Terry, slide on by. At least you'll get a few minutes in. Hey, and Tom does have it recorded. So when you're done with Tom's class or course or room, whatever, uh,
Trading room. Yeah.
trading room, there you go. Then you could watch my recording too, that type of thing. So you can really have both. You don't have to attend these live. This is recorded too, even though we thought it wasn't for a moment, but it is. uh, the Traders Lounge is recorded. Maybe, everybody has things come up. It could be at a meeting right now or the doctor's office, and you could come home 2 hours from now and watch this. So at least see what I'm thinking and what others brought up and we discussed. Oh, hi, Dave.
I
Good to see you. Good to hear you. Good to hear from you in this way.
I
Where
just
can
want
we
to point
sign up?
out I just want to point out too, if people are new to the Airmere site, if you go to the library, you'll see the opening bell, and if you're a gold member, you can download all the files, the MP4, the MP4, or the M4A audio, the closed caption file, the text chat, and an AI summary. So there's a lot of information you can get if you can download those as a gold member. Otherwise, we just post them for free on on YouTube for most of the public sites. Like all the stuff this week is all on YouTube.
Yeah. Hey,
So,
Tom, can you put a link in there? Somebody just asked where they can sign up for this.
oh yeah, sure. Let me grab that for you.
I'll have him put that in there. And uh, I know I'm harping on this a little bit, but I have a YouTube channel too, and I'm trying to grow it. So if you guys could go over to take a look at that, and then maybe subscribe to my YouTube channel, hit the bell so you get notified. What I've been doing with that is I usually put out one video a week, usually put it out over the weekend with thoughts on the next week, and then what I'm probably going to do now, since I'm here with Tom's site, I'm going to probably do two of them a week, kind of promote what we do here at Arrowmere, also, and so people can find me, can find Tom and all the other great content creators we have here on the site.
Yeah, it's a
So yeah,
good
take
good
a look at
bunch
that.
of people.
There is a lot of people on this site that you could learn from, and a lot of forums. I found there's certain segment of traders that don't have any use for forums, and then other ones, oh, they love it. And if it goes down, they go, oh, where to go, where to go. I found that at my other site I used to work on. There are people that like that. So we got that. I think Tom has everything I've ever seen, really, on a trading site
You got the whole
and
kitchen
more.
sink here.
Yeah, everything and more. And if you didn't know, Tom and I worked together years and years ago at the site I just left. He left a long time before me, but no, it's a great website here. Lots of great traders, and it makes it easy to do all these different things for you. Do these rooms, do the texting services, create content with courses. Do we need to register for each session each day? Tom, that's a Tom.
Yes. Yeah, there's separate Zoom meetings.
But I think it doesn't it autofill once you've done it, once you go to the registration, your
Yeah,
name.
your browser should remember you, so you just have to click on the link. It should pre-fill everything in, just hit register.
Right. Well, Perry,
And
I'm
then
very happy to be here.
Jim
Also,
asked how much the trade alerts are. I guess we haven't decided exactly yet, but I think Mark, you're thinking 100 or less a month.
yeah, it won't be more than 100. Uh, I'm still working. We're dialing that in, but that's for sure. Will not be more than 100. And I'll probably have it going by next week because I want to. This week, of course, you can be in these rooms on my rooms for free, and then starting on Tuesday of next week because Monday's not market's closed, we don't have anything. But um, starting on Tuesday, it's paid to be in here, and I want to have that other service going too. But I want to talk to people who come here before then, so they know about the trade signal service also. But we'll get it done. All right. Well, guys, it's really great to talk to you. And I hope you're all here tomorrow morning at 8 o'clock Central. We'll be back and looking and seeing what the market's done to us now, what kind of sweet, sweet candy the market's eating that makes it think it's going to the moon and maybe never coming back. All right.
All
I'll
right.
talk to you soon. Thanks, Tom,
Thanks,
for
Mark.
everything. You're the man. All
Yep,
right.
you bet. Thanks, Mark.
Bye.